The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the wheat markets found a touch of support on Thursday. We saw some pressure, though, in soybeans, corn a little bit lower, a mixed bag in the cattle trade. Outside markets fairly quiet. Got a few things, though, that I'm curious about that we need to watch in these markets, and we're going to ask those questions and dive in here today on Market Talk with Brian Doherty, Senior Market Advisor at Total Farm Marketing, joining us. Brian, good to catch up with you again this week, and I'll start this off with this. The soybean complex, to me, we saw more pressure there Thursday. Export sales didn't really offer much in the way of fresh fodder. Weather's been good for planting. Should we be concerned with the soy complex, maybe risk to the downside? Let's start our conversation there today, Brian. What do you think?
I think we've been concerned. I've been concerned. The market's following those concerns, and I'm more concerned after today than I've been in some time. The technicals look weak, and the ease at which it's dropping is bothersome. Now, there might be some that would argue, look, you're in this trading range. Let's look at, we're quickly approaching the first notice date, and then your next month is July. So let's work with July beans. So 11.49, where the market closed today, and that's down 15.25 cents. That's a lot of drop on a day where there really wasn't much for news. Exports weren't great, but it's a tough market environment. Technically, it looks pretty rough. We had a market that had a really good run up into mid March, and now we're trading $1 lower than that. That's a tough looking market. What it reflects really is a lack of positive news, a higher dollar, continued lack of export activity of any strength, in particular from Brazil, increased farmer selling in Brazil this week. The dollar is, remember, the Brazilians sell their product and they get dollars. So the dollar is gaining value. So there's just not a lot working in that complex, and meal continues to work its way lower. We had a good crush figure this week, but remember, we have more crushing capacity. But both meal and oil were down today. Oil hit, it double bottom now in the charts where it bottomed in late February. So, and that's despite an energy complex where crude oil prices are trading in the low 80s to mid 80s. There just isn't anything good in that complex right now.
It feels like to me maybe we're making a late spring low here potentially in this soy complex. I feel like we've done that in corn. Corn's been pretty quiet and range bound. But the soy complex, I had made this comment couple months ago that soybeans don't love being in the 11 range. It seems like in historically in the 10s or in the 12s, but not so much in that $11 range. So maybe with the fundamentals the way they are in the technical picture, maybe this is our late spring low. I don't know. I am very, very concerned about technically how this soy complex is looking right now, Brian.
Yeah, it looks weak. So what do you do? So if you're a farmer, I think you just continue to sell beans into this. The technical picture doesn't look good. We expect that I think that the acreage number, when you lose 2 million out of corn, but don't change the total number to a point that makes sense, it kind of leaves the wiggle room for bean acres to rise. And who knows? I mean, it's anybody's guess, but farmer surveys are one thing. I've talked to some farmers, some pretty big farmers, and I was surprised. They're all beans. Now, that might be few and far in between. I don't know. But it certainly is a little bit concerning that the bean acre could be on the rise, and that carry out points to something that would look like 10.50 $10 beans on the board. I just hate being that negative Nelly, and I hope I'm not right in the long run. But if we produce good yield and we don't capture export activity, somebody's got to tell me why this thing is going to stop dropping. I don't. Nobody's stepped up. Now, some will say, well, the carryout isn't much different from last year, and we're just reaching all of our uncertainty. That's all true, but we need to sell more beans, and that's a problem.
It is a problem, definitely. On the case of corn, corn's been, to my point just a minute ago, relatively quiet, fairly range bound, it feels like. Yeah, we slipped lower, I think, in sympathy with beans, but it just feels to me like this corn market's maybe, I think I said this the other day, maybe found its value point on the board, so to speak. I don't know, but talk to me about corn. What's your feelings as you look at these corn charts right now, Brian?
Yeah. So, well, they look a little tough. I'd agree with you, but a day like today, where all of a sudden you're breaking more to the bottom side and you're down 4 to 5 cents, and you're at the low end of the range, it's hanging on by its fingernails. Corn had a big miss. And what I mean by miss is if you look at the corn chart and you look what happened on March 28th and you posted this very large reversal of bullish news, that was on a Thursday. Acreage was down, stocks were a little lower. In theory, evaporated 400 million bushels ish off the table. And it's a 1 day event. And then the market kind of slumps and goes sideways. And it's been boring. And then it drops out today. I don't like the beans leading, corn down. Wheat seems to be hanging in there, but that too is a laggard. And if that doesn't start to percolate up a little bit more here, I'm concerned this whole complex. So, not trying to be Debbie Downer here, but I'm just reflective of the way the market looks on the charts and corn, beans, and wheat. Corn, you might argue, is holding in there, but holding in there isn't really a big victory when you're at a low level.
No, it's not. Well, and I'll throw this out here too, and maybe we can turn a little positive here, possibly. But wheat, found a little bit of strength Thursday. It feels like out of the three, wheat maybe has the chance to be the upside leader here of some sort, maybe tied with crude oil potentially. I think a lot of that though, with both those being such global markets, of course, it's tied to what's happening in Europe, the Middle East, the geopolitical issues, things like that. But I venture to wonder if wheat could maybe be the catalyst for an upside move here in grains at some point, Brian.
Well, I think wheat at present, when you look at the three and which one could drive, wheat, I'm going to put wheat in that category. In particular, if you look at where, again, we go back to exporting countries, tight on inventory from a big picture perspective, Jesse. And then more importantly, when you look at the potential for, let's say, Russia, Black Sea, Ukraine, for some weather developments over there, Russia's had big crop after big crop after big crop. And so the market could get kind of excited in a hurry. The Southwest remains in the drier side. Hardwood winter wheat is hanging in there pretty well. But there again, you need perception or something to get the money flow to move out of shorts and get long. But people get long because they have a belief that the market's going to reward that. That's the problem in the financial world right now. There just isn't a lot of belief that being long anything is going to be rewarding.
No, that is a very great point. And I think it just echoes risk management here, as best as you can, especially even as you're getting busy with spring planting. I think we touched on this last week, Brian, not losing sight of your marketing plan and being disciplined here as these markets are going through a tough stretch right now.
What's a tough stretch? And tough stretch can get tougher, or all of a sudden we just come out of it. I think there's a lot of farmers out there that have kind of capitulated. They've got to move corn sooner than later. That's what's keeping the rally in check. I think that's what happened on March 28th. We got a bounce. People that, farmers didn't see that it moved much the week after and started, moving corn again. We're seeing basis do some heavy lifting to pull corn. Those are all things indicative of big supply markets. You've got them in corn, beans, and edging that way in U.S. wheat. And so it's just a matter of time. But to really get the market turned around, you need something that gives a different focus on supply. I've done this 35 years, and sometimes in a market environment, you kind of look at all the numbers, look at it and go, this could be friendly to price. And then you look at it, the next thing, go, but it's not happening. And so that's where we are right now. We've got some things that could be friendly, but it's not happening. The end user, I threw this out there before, the rest of the world coming out of COVID, we talk about inflation. It might just be that the world doesn't have a lot of extra money to go chasing grains as long as they can buy hand to mouth and thinks that and believe that it's there. And I think the fund money that stayed short these markets is reflective of that mindset.
Well, joining us here today on Market Talk, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, let's go over to livestock. Cattle trade, kind of a mixed bag there. We saw good numbers Monday, follow through Tuesday. It was quiet Wednesday. We come back with a little bit of green here on Thursday. So mostly an up week. Cattle on feed is out Friday after the close. Wondering if this market positioning a bit here this week ahead of that report and just trying to try and gain back some of the losses we've seen here in cattle in recent weeks, Brian.
Yeah, trying to work that way. That's uncertainty, of course, with the flu and just a lot of uncertainty with economic conditions. I am genuinely concerned that the marketplace is struggling as well, and I think there's economic conditions there. Big picture, I'm worried that the rallies, like the other markets, be viewed as opportunities to sell. Cattle on feed report though on Friday is going to show us that we've got tight inventory. So I just want to believe that we've got middle ground here, that we'll get recovery, then kind of hit reset and start to figure out where we need to go from there.
Cash trading cattle's been interesting here, with all the volatility on the board and in futures. That cash trade's still been rocking in the countryside for the most part.
It
And so
is.
that's it. That's been this kind of disconnect I've noticed with the cattle market here. As you really step back and take a look at it, I agree with your points on some of the economic issues, et cetera. But then you look at what's going on in cattle country, and there's a slightly different story going on there though too.
Mm-hmm. You bet. There's a divergence, and the cash
Yeah.
country is cash is king. So I'm of the belief that the cash will eventually lead the futures when you have tight supplies. That's generally the case, and whether it's grains or cattle or wherever, I'm going to be a little bit more perceptive and inclined to make sure that as we move forward, that we have good discussions with producers, though, when prices rally, to recognize just how fast they can fall apart, and especially if we get, this whole Middle East is a powder keg. You've got all kinds of issues out there that are concerning. So, big picture, that would be my concern for most cattle producers, is we've got to be prepared for the unexpected. Same thing with hogs. Hogs, we saw a really nice run up, and then a big dump out. The community traders show that the money really went long hogs, and then
Mhm.
punched out. So I want to be friendly to meats, though. In particular, I think the cattle market has, of all the commodities, that has the best underlying strength.
Yeah, oh, I would agree with you there. Dairy markets too. We should touch on those. I mean, obviously dealt with the news cycle with the HPAI and more. Any thoughts for us here as you look at this dairy trade wrapping up the week?
We had good exports that were announced, for the February exports, the first kind of uptick there. That was a good sign. I don't think the bird flu, if I had to guess, is not going to be viewed as a big impactful thing. That jury's out, though. We don't know. The market's been volatile. We're starting to see cheese recover. We start seeing the back months have some good, what I'm going to call back month opportunities. So a lot of times dairy farmers like to look in quarters and whatnot. So I got 18.35 average price for July through December. That's respectable. I'm going to stick with the mindset and the bias that prices are trying to seek a low in here. They've actually shown some good strength lately, and I think that's reflective of increased consumer demand. Cheese just got too cheap.
Mhm.
It's a highly used product, and when it's in a bargain place, sometimes it just languishes there. But then when they come in and buy, it moves quickly.
Brian, always enjoy a conversation with you here as we wrap it up. I know if folks have questions and they want to talk about their marketing strategy and more, a lot of great ways to get in touch with you and the rest of the team there at Total Farm Marketing. It's really about having a conversation if you got questions, right, Brian?
It is. Talking things out is probably your best method to get things started and then put the strategy together. I would just call us 800-334-9779. Jesse, we're happy to take a call. Otherwise, you can email me, Brian with a Y, at totalfarmmarketing.com, or check out our website, totalfarmmarketing.com.
Brian Doherty with Total Farm Marketing. Always good to talk with you, sir. Thank you for joining us. Have a great weekend. We'll talk to you next week.
My pleasure. Thank you.
That's going to do it for the show. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.